Discover the power of combining multiple tax strategies to potentially optimize your financial future. I'm Nate Miller with Miller Retirement Group, and we've discovered over 60 different tax strategies that work well in retirement. And I want you to stay tuned for individual videos on each of the 5 most used tax strategies that we've identified for retirees. And then stick around for the very last video where you will learn how combining them could actually potentially supercharge your tax savings. So the first strategy of the 5 that we're going to be going over is something called tax loss harvesting. That's strategically selling investments at a loss to offset gain and potentially reduce your tax liability. The second one we'll end up going through is something called qualified charitable deductions. That is supporting causes that you care about while enjoying potential tax deductions for your charitable contributions without having to itemize to do it. And then third thing we're going to go over is Roth conversions. So you can take control of your retirement taxes by converting funds from traditional IRA retirement accounts to Roth IRAs, potentially avoiding future taxes on all withdrawals. And then we're going to talk about IRA conversions to index universal life, just a little bit different than a Roth conversion, but similar. And you can explore the benefits of converting an IRA fund to an index universal life policy, combining tax advantages with the protection of life insurance. And then finally, we'll talk about donor advised funds. So this is going to help you simplify your charitable giving and receive potential tax benefits by contributing to a donor advised fund, even over and above qualified charitable deductions that I talked about a little earlier. And so that's your introduction to the different 5 topics that we're going to be going over. Today, we're going to start with the first one that we talked about, tax loss harvesting. And as you search for ways to optimize your retirement savings, an option to consider could be tax loss harvesting. In this short video, we'll explore what tax loss harvesting is and why it could be crucial for creating your ideal financial future. First, let's look at a hypothetical example. Let's introduce you to someone called Sarah. She's a soon-to-be retiree. She has been diligently saving for years, but she's worried about how taxes could impact her retirement income. And that's where tax loss harvesting comes in. So tax loss harvesting is a strategy that involves selling investments that have experienced losses inside your non-qualified accounts. What is a non-qualified account? Those will be any non-IRA or non-Roth IRA investment accounts. Sometimes these are called after-tax accounts or individual accounts or joint accounts. There's no tax deferral. There's no tax-free nature to these accounts. When something is bought or sold, that actually could create a tax issue in that year that it happened, even if you didn't actually take any of that money out. And so by selling these underperforming investments, individuals like Sarah could offset their capital gains, potentially reducing their overall tax liability. But why is tax loss harvesting so important, especially for retirement planning? Let's take a little closer look. First, tax loss harvesting could allow retirees to minimize their tax obligations. By offsetting some of their capital gains, they may be able to significantly reduce the amount of taxes that they need to pay when that cash actually comes out of those investments. And second, tax loss harvesting could facilitate the rebalancing of investment portfolios. See, over time, some investments may outperform others, causing a skewed allocation. And so by selling poorly performing assets, individuals could reinvest into more promising options, working to maintain a diversified and balanced portfolio for the long term. And additionally, tax loss harvesting could be used to also strategically create a tax-efficient withdrawal strategy during retirement. By carefully managing our capital gains, retirees could optimize their withdrawals by helping to minimize the tax impact, ensuring that their hard-earned savings last as long as possible. And so remember, tax loss harvesting, it's not going to be a one-size-fits-all approach. It does require careful consideration of individual circumstances and also individual investment goals. So consulting with a financial advisor and a tax professional is crucial to ensure proper implementation and in order to optimize the benefits of this strategy. So as you plan for a comfortable and worry-free retirement, don't overlook the power of tax loss harvesting. And taking proactive steps to minimize your tax liability could have a significant impact on your long-term financial goals. And so if you want to start exploring how tax loss harvesting or how efficient tax strategies can potentially improve your retirement today and start embarking on a path towards a brighter retirement future, then go ahead and download our complimentary white paper titled, "Are You Paying Too Much Taxes in Retirement?" It'll be a great resource to start understanding the impact of good tax efficient strategies in retirement.